over the next 30 years is that the strongest digital property, a la Bitcoin, is going to eat into $500 trillion worth of property: gold, precious metals, real estate, bonds, equity indexes, collectibles, however you store your money for the rest of your life. And then the strongest digital currency is going to eat into the economic value of the other currencies.
Hello and welcome. This is the Daily Crypto. The authorities have been quite reluctant to use the R word, but the numbers are quite clear on the fact that we are already in a recession. Would it be better for sovereign fiat to switch over to digital currencies? When is the crossover point from now? What will Bitcoin be like in 30 years? Keep watching to find out as we answer these questions with Michael Saylor. Over the years, there have been multiple technological revolutions in softwares. How does Michael Saylor connect what he has seen historically in tech and software with how that has influenced his thinking about Bitcoin?
Yeah, I mean, I think I was catalyzed, propelled into the space by the crisis of 2020, the pandemic. And March of 2020, I think everybody started questioning a lot of values. And I think my conclusion is conventional treasury strategy is broken. There's no point in making money anymore if you're going to keep it. And so the idea of cash being trash was something that was drummed into my head March of 2020 when I realized I had $500 million of cash and it was going to be deemed worthless it was already deemed worthless by the investing public. At one point, our stock, in essence, traded at 50% more than the cash level that we had in the balance sheet. So the conclusion was it was hopeless. Like when I concluded that saving in cash was hopeless, right? You have nothing to lose. So this has become mainstream view now, right? I mean, Dalio says cash is trash. I think people are saying the 60-40 bond portfolio, equity bond allocation is a broken model. Inflation is here. Hyperinflation is the rest of the world. It's not going away. The Federal Reserve said there is no inflation and interest rates will be zero forever. And now the Federal Reserve says, well, if we could just keep inflation from increasing beyond 8% forever, we'll declare a victory.
Saylor adds that was an impotence. Saylor points out that when you are trying something like that and it is not working year after year, in time you will be facing a mortality event, one that is either a slow death or a fast death, unless you do something. At that point, what has to be done is to sell oneself or commit economic suicide. Sounds dark, but it is the reality of the market conditions, he adds.
That's why we did what we did. I think my background in technology is digital transformation, and I watched how the digital transformation of music or maps or documents or relationships or communications created Amazon and Apple and Google and Facebook and trillion-dollar entities. And it was pretty clear to me that if you can digitally transform something, it wouldn't be just as good as the thing that you had. It would be 100 times better, maybe 1,000 times better. And that's pretty obvious today that, who remembers Kodak? What's Kodak's market cap? What is Xerox's market cap?
Yeah, absolutely.
Right? Companies like, the document companies, the photo companies, Instagram, Facebook, all of these companies have just outstripped their 20th century analogs.
Yeah.
So people figured that out in 2020, but the paradigm shift is when you're in the business, you can't contemplate the digital transformation obsoleting you, or it's such a horrifying thought that you don't want to embrace it. That's the paradigm.
So what makes digital currency so fascinating in the world today? Saylor responds.
So if you understand that, then I guess March 2020, the first thing that happened was getting slugged in the head with a 2x4. You're failing, your money's going to zero. And the second observation was, oh my, there's actually been a digital transformation of property, currency, and energy. I didn't quite appreciate just how profound it was. I just knew I needed a solution. So I started looking for a digital gold, right? I wanted a non-sovereign store of value asset. So it really legitimate. It literally was a question of, do I buy $500 million worth of gold? Or in this case, it was $250 million of gold. Or do I buy $250 million of crypto gold? And if it's crypto gold, well, I think engineered synthetic gold is better than gold. And now I just had to parse through all of the hundreds of options to conclude that Bitcoin was synthetic gold. And that was enough to solve my problem in the near term, which, how do you got a mortality situation. You actually have to find synthetic gold. I find it. And that was Bitcoin.
According to Saylor, what happens next is the exploding appreciation, a profound demand for two things in the world: digital property and digital currency. There are 8 billion people on the planet that want a high-velocity money in the near term that can be used to pay for things daily and tax-free in a compliant fashion, so that 8 billion people can trade with about 100 million companies across borders using a computer. He continues.
Those 8 billion people, if you look out more than 4 years, if you've got money you want to store for 4 years, 8 years, 12 years, 40 years, a lifetime, they want property. And buying a building in Africa, buying a bar of gold, buying a security, it's either not practical, it's not safe, or it's not efficient, right? When you buy property, you have to buy scarce, desirable property with a low maintenance cost, that's portable, that has no counterparty risk. And so what you have is a real huge demand for digital currency and digital property. And once you understand that, then you realize that this is the digital transformation of currency property. And of course, I'm an engineer, so I see if it's a conservative thing, it's energy. So it's digital energy. And we never had in the first wave, in the mobile wave, we never had digital energy, digital property, digital currency. And it's such a profound paradigm shift that everybody in the world using this stuff can't imagine what it means to be digitally transformed. So you've got this little turbulent shockwave where some people immediately get it, right? Some people got it 10 years ago.
What are the broader applications of this technology in a lot of areas? That would include the digitization of fiat, as well as the deeply held conviction about the long-term role that Bitcoin can play in the world. In that case, when is the crossover point from sovereign money to digital currencies? The founder of Microstrategy answers.
Yeah, my thoughts on all those subjects is the big blockers were profoundly wrong. And it's pretty obvious they're wrong because Bitcoin Cash has lost 99.5% of its value in 5 years against Bitcoin. So the market's trying to tell you it doesn't like that idea. But the idea was wrong on the surface, because if you're changing the protocol economically, it's an ethical lapse. And so when you actually when you monkey with the block size, you're screwing with the economics for the miners. And when you're messing up the economics for the miners, you're undermining the integrity of transaction fees. And when you do that, you're undermining the integrity of the security of the network. So generally, I think my view at this point is any kind of software upgrade that materially changes the protocol for any reason other than to cure a fatal security bug is probably an ethical lapse, right? And you need to be very, very conservative on those things, like extremely conservative, because you're changing the economics for all the actors. And so that's why the right answer is don't hard fork the thing, don't change it. Literally, just don't change it, right? Engineers want to change things, but if your solution to improving a crypto is write code, it's probably an ethical lapse.
It's an ethical lapse because the integrity from Bitcoin comes from work. Improving the security of Bitcoin would cost billions of dollars by buying Bitcoin mining equipment and energy. Saylor continues.
You want to improve Bitcoin, you buy $1 billion of Bitcoin and you put it in cold storage. That's expensive, right? You want to tweak a line of code because it makes you feel better. That's cheap, but it's a real moral hazard. And so I think that the Bitcoiners that fought that block size war and won it, they were on the right side of ethics and technology. I think if you look out in the future, the assets that win in the next 100 years are the ones that are technically sound, ethically sound, and economically sound, right? And if you're monkeying with hyper complicated software such that your network gets hacked or it crashes or it goes down, it's not technically sound. And every time you push a hard fork, you ought to say to yourself, in about a decade, I'll know whether I introduced a fatal bug. That's how risky it is. Like 5 to 10 years, probably 10 years later, you can say, well, I think the code might be technically sound. That's just how sensitive that is with regard to something like a layer one base layer. And I think with regard to economics, right? You can't change the economics of the network. So when you destroy the miner's economics, you destroy the integrity of the network.
At this point, it's only fair to ask, what will Bitcoin be like in the next 30 years?
So I think that conservatism on the base layer is important. As for what I think will happen over the next 30 years, I have a model which is multi-layered. I mean, this simple model, which is, okay, there's a layer one and it does everything. That's just too simplistic and monolithic. And I just think it's wrong. It's intellectually bankrupt and wrong. That's one of the problems with the thousands of cryptos that think that they have to build layer ones to do transactions. It's just a wrong idea. The universe doesn't work with one element and it doesn't work at one frequency. A better idea is there's a monetary network that's the property base, and that's Bitcoin. That's like granite or schist in Manhattan. And the speed with which you can move 1 million tons of schist in Manhattan is very slow. I mean, by that standard, if I told you I could move all of Central Park every 130 milliseconds, you would think I was magical. But Central Park hasn't moved in 100 years, maybe in 1,000 years. The bedrock under Manhattan is 200 million years old. You don't need to move the foundation of the world every millisecond in order to build the world.
Thanks for watching this video. What regulatory measures would you like to see in the cryptoverse, if any? Let us know what you think in the comments section below. Don't forget to like, share, and subscribe to our YouTube channel. See you on the next one. Until then, bye.